Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are little changed this morning as investors prepare for a very busy afternoon on Wall Street. At 2 p.m. Eastern, the Federal Reserve will announce its latest decision on interest rates before Fed Chair Jerome Powell delivers remarks at 2:30 Eastern. According to the latest data, traders are unanimous that rates will hold steady today, and over 85% of traders don't foresee a rate cut this year. Meanwhile, 4 of the biggest holdings by weight on the Global X NYSE 100 ETF, Microsoft, Amazon, Google parent company Alphabet, and Meta will report their earnings following the closing bell this afternoon. Another notable holding in the ETF, NYSE-listed Visa, is looking at a 6% gain when markets open after beating analyst estimates on both the top and bottom lines on Tuesday afternoon. In a statement, CEO Ryan McInerney credited consumer spending, which he said was, quote, resilient, end quote. The Global X NYSE 100 ETF tracks innovative companies. Here's what else is on tap this hour. Harvey Flax, NYSE parent company Intercontinental Exchange's Director of U.S. Interest Rates Futures Business Development, will join me momentarily to discuss what markets are anticipating from the Fed when it announces its latest policy decision this afternoon. Meanwhile, Canadian-based fintech Neo Financial has announced its entrance into institutional capital markets following its more than $100 million inaugural credit card securitization. The company's co-founder will tell us why the firm is making the move now. And at 9:30 Eastern, billionaire hedge fund manager Bill Ackman will ring the opening bell to celebrate a pair of IPOs, alternative asset fund Pershing Square and closed-end fund Pershing Square USA. Both will begin trading later today following the price discovery process. But we begin with the markets, as we always do here at the New York Stock Exchange. Joining me now to set the scene for one big market mover, today's Fed decision, is Harvey Flax. He is the Director of U.S. Interest Rates Futures Business Development at NYSE parent company Intercontinental Exchange. Harvey, welcome.
Good morning, Ashley. Thanks for having me.
All right, so we have this Fed decision. What are futures markets showing right now about what might happen today at 2:30 Eastern?
Sure. As you indicated in your opening, the futures market's pricing in a near 100% probability that the Federal Reserve will keep its monetary policy rate Fed funds on hold this afternoon, maintaining its current target range of 3.5% to 3.75%.
And what is the macro backdrop that's driving market sentiment for today's meeting?
Sure. So on a headline numbers perspective, you had inflation, CPI jumping 3.3% last month. On the back of significant increases in energy prices. Core CPI stayed around 2.6%. This is indicative of inflation higher than where the Fed would like it, though mostly in check. On the labor side, you had 178,000 jobs created in March, with unemployment ticking up slightly to 4.3%. This is softer than where it was last year, though by no means a catalyst for a 25 basis point rate cut this afternoon. Now, overall, the policymakers are going to be focused on the Iranian conflict and its ongoing impact to energy and commodity prices. Most analysts believe that they will vote to keep rates on hold this afternoon, and they will wait for additional monthly data reports before considering any changes to monetary policy.
All right, and how has the conflict in Iran altered the market's view on near-term Fed policy?
Sure. So I'd say prior to last meeting, you had the market pricing in 225 basis point rate cuts for this year. There's been a significant change in sentiment since then. Those 225 basis point rate cuts have been taken off the table. And now looking further out, you have maybe a 30% chance of a single 25 basis point rate cut happening deep into next year, Q3 of 2027.
How is the Kevin Warsh nomination being viewed by investors?
Most market analysts believe that Kevin Warsh is eminently qualified to become Federal Reserve Chairman. Most of those same market analysts believe that he's going to have some friction with the current slate of FOMC policymakers. He's been very vocal about the need for regime change at the Federal Reserve, and that's with those very same policymakers that he has to basically make policy with now. And his views overall on monetary policy as well, his core belief is that you could slash the Federal Reserve's balance sheet. You could couple that with a gain in productivity gain from the AI boom, and that would allow him to slash interest rates without affecting inflation. I don't believe the current slate, well, most of the people on the FOMC committee at this time will agree with that viewpoint.
What comments are you expecting from Fed Chair Powell in the post-meeting presser?
Another very busy afternoon for the chairman. He will certainly be very, well, first of all, he's going to face questions about the Iranian conflict, its impact on inflation, both short-term, 6 months out, 1 year out. I believe he will receive questions related to, stagflation, recession, et cetera. Now, away from that, this is the chairman's last meeting as the chair of the Federal Reserve. I'm sure he will receive questions, some nostalgic or just viewpoints on how his tenure was. And away from that, there is a question of whether he is a chairman reserve. He is a member of the Federal Reserve Committee. That board seat doesn't end till, I guess, February or January of 2028. And there's questions around whether he will continue in that role or step down when he steps down as chairman.
All right. And what implications does Fed policy have on mortgage rates and the housing market?
Well, the Federal Reserve monetary policy rate, it's the base rate in the United States. It governs all short-term loans in the U.S. The 30-year fixed mortgage rate, the primary rate in mortgages, that's driven primarily by the yield on the 10-year Treasury note. Now, overall, the trajectory of monetary policy can influence the yield curve, the Treasury yield curve. What we found in this current time frame is that the yield on the 10-year note is approximately 15 basis points higher than when the Fed first started lowering rates last year. That's been a journey. It's gone down, it's come back up, related to economic policy from the administration, related to the Iranian conflict. On the mortgage side of the ledger, you have, looking at the ICE 30-year rate lock mortgage future, the September 2026 contract is reflecting a 6.4% rate for mortgages. That's literally where it was a year ago in September when the Fed first started lowering rates.
All right, Harvey Flax from Intercontinental Exchange, thank you so much for joining us at the New York Stock Exchange.
Ashley, it's a pleasure to be here. Thank you.
Pleasure to have you. Coming up, the leader of one identity security platform explains how business leaders can protect their organizations from the latest cybersecurity threats. But first, Chris Emmons, president of ICE Fixed Income and Data Services, explains how ICE is digitizing the mortgage lifecycle and harnessing data insights with new tools. Check it out.
ICE is digitizing the mortgage lifecycle and harnessing a wealth of data insights. One tool that helps generate alpha is the ICE MBS Mortality Indicator, which uses data from our mortgage technology and fixed income businesses to produce daily trading signals for agency residential MBS pools. We believe these signals are significantly more precise at predicting short-term prepayments than traditional modeling, and our feedback from our clients, which include hedge funds, broker-dealers, foreign pension funds, and large global investment banks, has been overwhelmingly positive. In terms of lending trends, there's been a notable rise in non-qualified mortgage origination, loans that don't meet standard underwriting criteria, driven in part by the rise in self-employment. Lenders claim underwriting is prudent, but the proof will likely come if home prices fall 10 to 15% in certain regions. ICE's tools help predict loan performance by exposing costs beyond principal and interest, such as insurance, utilities, and taxes, giving clients a granular understanding of risk and potential deterioration in performance. Overall, the mortgage market lacks the analytical capabilities that participants in other asset classes have come to expect. By combining origination and servicing data with ICE's capital markets presence, we can provide greater transparency through transaction-based data for better pricing and prepayment modeling. Greater confidence in managing risk means mortgages can be extended to a larger number of prospective homeowners.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself, it's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry. To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Last month, leaders from across the cybersecurity ecosystem gathered at the RSA conference in San Francisco to chart the future of the industry amid the latest wave of cyber threats. That included Mickey Bresnan, CEO of Simperis, who took J.D. Durkin through the work his company is doing to protect companies from risk. Take a listen.
You think about the modern age where we have AI, which in most cases means also adoption of more cloud than before, because you want the AI to be as successful as possible. All of that basically means now that as organizations, we have a much higher dependency on the technical infrastructure of our environments. And a big piece of it is actually identity. Identity is what allows AI and humans to authenticate. It also what allows AI and humans to get authorization and permissions to do things in the environment. And sometimes something that people don't always think about, but if your identity systems goes down, then all of a sudden, the dependencies that you have on the AI infrastructure, like agentic as an example, they can't do nothing in the environment if they can't authenticate, which basically means that when the identity is down, the agentic part of the organizations, in most cases, will stop performing as well.
How has identity become the new front line in cyber defense?
Sure. So I think it's a combination of several different things. The first one will be the fact that, as a bad actor, I now know that if I get a hold of your identity system, I own the entirety of the organization, which means that if I want to steal data or if I want to take the company down, compromising the identity system is going to be a major target for me, because once I'm successful, I don't need to breach anything else. We always remind people that instead of going against their cloud infrastructure, as an example, it actually makes more sense to breach their identity systems, and from there simply log in to whatever it is that I want to do next in the environment. So that basically made identity a big target for the bad guys. At the same time, if you are leveraging the identity systems correctly and you put the right protections in place, identity can actually be the thing that protects the organizations. So even if part of the infrastructure have been compromised or something else happened in the environment, like an agent went wrong, then still by having the right permissions in place and the ability to disable the bad activity as soon as it happens, you can actually defend the organization by leveraging the identity platform.
Do you think most companies are effectively and properly protecting their identity environments right now?
That's a bit of a tricky question, and the reason to the answer is because of the right now. We live in an environment where things are changing every 5 minutes, right? If you're following up what's happening with agentic or Gen AI as well, things are evolving extremely fast. So whatever defenses you had in place before, you probably need to rethink those now as soon as you start to adopt AI. And having a lot of conversations with different organizations that, the AI train is left, and they're kind of running after the organization right now, trying to put the guardrails to make sure that bad things doesn't happen. So to your question, Some organizations are actually already there. They've been deploying, things like attack path analysis to understand what can go wrong in the environment. They've been scanning the environments to see where they have indicators of exposure and closing those. And they're doing it on a continuous basis, so they're kind of trying to stay ahead of the game all the time. They've been thinking about the resiliency so that, as I mentioned before, mission-critical activities in the organization that are dependent on agents that are dependent on identity on the other side of that equation will continue to operate no matter what. But at the same time, the attack surface is constantly changing. So it's not something that you can be done with. You need to have a continuous approach to improving it.
Are there particular industries that are more vulnerable than others to identity-based cyber attacks?
To some degree, yes. I think what we're seeing is a lot of the bad actors going specifically after healthcare. Main reasons why, because that literally will mean that there is life on the line, right? Because if I can compromise the healthcare environment and take that healthcare as ransom, then all of a sudden not paying ransom becomes a very hard choice for the organization, unless they have the ability to bounce back. And I remember a couple of years back, there were several of those criminal gangs that said that they will not go after the healthcare organizations because of what it means. And yet we still see those happening on a daily basis. So I think it's not necessarily because of their not doing a good job compared to the rest of the industries. It's more about them being a target with a very big. And then the other side of that equation is going to be obviously the financials. As the joke goes, why rob a bank? Because that's where the money is. So that's something that the bad criminals are doing as well. They're going specifically out after financials. But honestly, we're seeing now across the board in every industry. If there is something that can be viable to me, is it like a criminal gang, a nation state, whatever the case might be, it's all over the place right now.
The company is producing a full-length feature film called Midnight in the War Room, all about cyber war and the broader plight of CISOs. Why did you decide to produce this type of film, and what are you hoping to get out of it?
Yeah, so it's a documentary about our industry, about the cybersecurity industry. And we had an interesting opportunity to interview people from the government side of the house, ex-government leaders, I would say, in the space of cybersecurity, all the way to the other side where we interviewed reformed criminals. We kind of draw the line of not interviewing active criminals, but people that have been reformed, and being able to hear their stories and how do they see it from their point of view and how do those guys see it from their point of view. And then in between those two, you actually have the cyber defenders, which is typically would be the CISO and organization that operates under that CISO. And we wanted to shine a light on what this industry is all about. Because many times when people think about the industry from the outside in, they kind of imagine guys in hoodies in a basement clicking away. And that's fine. We do have some of those as well, so nothing against that. But obviously the industry is much more, than that. And we do want to have more people joining the industry, and we want people to understand that there is an opportunity for them to make an impact in this industry, even if they're from a certain background or if they have a certain skills, because the industry needs a variety of different, and we do need this, differences between different defenders and what they can actually do. So that was part of the goal, to try and get more exposure to our industry and get people to want to join the industry.
Thanks, Mickey Bresnan and JD Durkin for that interview. You are looking at the trading floor. Bill Ackman heading up to the podium in a few minutes to ring in the pair of IPOs for Pershing Square and Pershing Square USA. And coming up, Neo Financial announces its entrance into institutional capital markets following a 9-figure move. Its co-founder joins us to share the details next.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Ackman and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Canadian fintech Neo Financial says it's entering institutional capital markets for the first time ever. The firm revealed last week that it raised 150 million Canadian dollars, or about 110 million in US dollars in its inaugural credit card securitization. Joining me now to discuss this new announcement is Jeff Adamson, Neo Financial's co-founder and chief commercial officer. Welcome to NYSE Live.
Great to be here, Ashley. Thanks for having me.
So why is this milestone particularly significant for Neo Financial?
Well, I think first of all, the era of cheap venture capital is over. Fintechs that can't access institutional capital markets are either stuck or burning equity to survive. And the ones that are building real credit infrastructure like Neo, these are portfolios that institutional investors will buy. They're really separating themselves from the ones that were just riding the last cycle. And the fact that Neo's has gotten this done at this scale, I mean, the credit card securitization markets, they evaluate data on pure objectivity. And the fact that we got this done at this scale tells us that the data is there and the value creation is real.
And how does the capital help build out Neo Financial's credit card portfolio?
It really allows us to say yes to more Canadians. For context, the Canadian market is one of the biggest financial markets in the world. As a percentage of GDP, it's almost double the size of the average company or of the average country. And so we're talking about one of the largest banking disruption markets on the planet. And we're one of the largest consumer fintechs in that country. So we want to be able to say yes to more Canadians. We want to be able to expand to other countries. And this inaugural securitization really is that first step that allows us to have that fuel to grow using really the big bank playbook.
All right, and what are some of the biggest money questions that your clients are asking right now?
I mean, listen, Ashley, I think that Canadians and Americans alike are getting pinched. They're getting pinched at the pump, on the mortgage, and more people are looking for ways that they can save money, that they can extend their runway. And I think Canada, like America, you have a lot of large institutional banks that are really built on top of legacy infrastructure with a very thin veneer of digital paint on top of it. And now we're in the age of AI, where people are bolting on AI onto legacy infrastructure. So I think we're having a moment right now where the consumer fintechs at scale are going to be able to really deliver an immense amount of value to consumers and really help them make smarter money choices.
And competition in the fintech space is heating up. How does Neo Financial stay ahead?
It really comes down to product velocity and the fact that we've built our infrastructure from scratch, everything from the core to the processing to our issuing capabilities. We're not built on top of this legacy infrastructure that trad banks are. And then what it does, it allows us to move quicker, to be closer to our customer, to respond to the market. I mean, listen, Ashley, we're living in probably one of the most dynamic times ever. And I think one of the challenges that a lot of the legacy banks are having is that they're really operating on a playbook that maybe worked 5-10 years ago. But with the market changing so quickly, you have to be quicker to be able to respond to that. And that's really one of Neo's core advantages, is being able to deliver on product velocity quicker than anyone.
And how is Neo Financial using AI across its platform?
Yeah, it's a great question, Ashley. So one of the ways is on the credit card side. So the securitization provides us the fuel. The AI really provides us the intelligence. We're talking about credit monitoring at scale, line assignment at scale, better underwriting, faster model generation. Just allows us to move faster, provide the right product at the right time at the right price to the consumers that are coming to us.
All right, and in late 2025, your firm announced that it received the top ranking in Deloitte's Technology Fast 50 Enterprise Industry Leaders category. What fueled Neo's Financial's recent momentum in our last few seconds together?
Yeah, I think, listen, from the start, Neo was built as a technology and a data company, which means higher velocity, better unit economics, and a customer experience that is vastly superior. And I think the fact that we've topped the Deloitte Fast 50 3 years in a row, Ashley, is really a testament not only to the product that we've built, but just the amount of pent-up demand that consumers have for more competition in banking and for more differentiated offerings.
All right, thank you, Jeff Adamson, Chief Commercial Officer, Neo Financial, for joining us on NYSE Live.
Thanks, Ashley.
Stick with us. Billionaire hedge fund manager Bill Ackman will ring the opening bell next. You just saw him during that interview signing the distinguished guest book. His wife, Neri Oxman, next to him on the floor, and they're heading up to the podium.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, billionaire hedge fund manager Bill Ackman will ring the opening bell. Ackman is on hand to celebrate a pair of IPOs, alternative asset manager Pershing Square and closed-end fund Pershing Square USA. The combined offering raised $5 billion with shares priced at $50 apiece. Pershing Square oversees more than $30 billion in assets under management across a suite of permanent capital vehicles. We're going to go to the bell. There's Bill Ackman, ready to ring the bell. just saw Bill Ackman ring the opening bell at the New York Stock Exchange. His wife, Neri Oxman, just shared a kiss with her up at the podium. Lynn Martin, NYSE president, is there for the occasion, and he's celebrating a pair of IPOs for Pershing Square and Pershing Square USA. And the stock market is officially open for trade. Joining me now is Kenny Polcari, partner and chief market strategist at Slate Stone Wealth. Kenny, welcome to the New York Stock Exchange.
Well, thank you for having me. It's always a pleasure for me to come home.
The market's just opened seconds ago. A busy day today. What are you going to be looking at?
So listen, I think you got to look at the obvious things, right? The FOMC, which I think by all rights is going to be a big nothing, right? Because rates going to be unchanged. Jay Powell, while it's his last official presser, I'm imagining, I don't think it's going to say much other than they're concerned about inflation, they're concerned about energy, they're concerned about raw materials. But at this point, Jay Powell, I don't think that Jay Powell can really set the tone going forward because he's really handing it off. He can set the tone broadly for what the economy is, but I don't think it's his place any longer to set the tone for where the Fed is going. So I think if he tries to do that, the market's going to discount it because Kevin Warsh is expected to come in and kind of, put his stamp on it. So it'll be very different, I think, what a Powell Fed is. But that's what I think is going to happen at 2. And then certainly at 4 o'clock after the market closes, I think is going to be when all the excitement happens because we're going to get Amazon, Meta, Microsoft, and Google. There's especially after yesterday's Wall Street Journal article that kind of raised some concerns about CapEx spending and, where's the growth? That's what investors are going to be focused on. So it's going to be very, very interesting right after the bell.
And when traders, almost 100% of traders are saying that the Fed is not going to cut rates. How are they so certain when we get these surveys and we hear from traders?
Well, listen, it's just a sense of look at what's happening in the economy, look what's happening at prices at the producer level, at the consumer level, at the raw material level, what's going on. You can see it, right? I mean, you can see it right in front of you. And so therefore, it doesn't dictate when you see rising inflation, you see rising prices at all these different levels. It's difficult to say, oh, yeah, we need a rate cut. In fact, we probably need a rate hike if this continues. And you're going to see that tomorrow out of the ECB and Bank of England. They're going to keep rates unchanged, but they're going to leave the door open to a hike. It's going to be interesting if Jay Powell slips that into his commentary today, whether or not he thinks, a rate hike is possible. Look, Jamie Dimon said it out loud. Get ready for a rate hike in 2027 with no rate cuts for the balance of this year. And quite honestly, if you look at the world interest rate projection for the rest of the year, there are 0 cuts now priced into the market. Earlier this year we had 2 and sometimes even 3 3 estimates calling for 3 different cuts. Now there are 0 cuts, less than 10% at every Fed meeting that's going on. So I fully don't expect we're going to see a rate cut. And certainly if the data continues to get worse, right? And if this conflict in Iran continues and oil stays elevated for another month and a half, then it's going to start to be a real problem for the Fed.
You also mentioned earnings. We're going to hear from 4 of the 7 Mag 7 companies after the bell. Right. What are you going to be listening for?
So listen, first of all, everyone's going to be looking at CapEx spending, right? Between the 4 of those hyperscales, I think they're expected to spend $600 or $625 billion in 2026, right? Meta, I think, is $100 billion itself. And so therefore, everyone's going to pay very close attention to that, especially after what happened with yesterday's Wall Street Journal article. Now, look, it was just an article written by a journalist. It wasn't written by the company, wasn't written by the CEO. So you have to kind of take a step back and think, okay, is this one story really going to upend the AI trade? I don't think it is. But I think investors are going to be very, very keen on listening to not only what they're spending on CapEx, but where they expect the growth to come from. So places like Google and places like Meta, you're going to watch also ads, and Amazon, you're going to watch it, Amazon Web Services, all the things you typically look at. But the big one I think is going to sit on investors' minds is the amount of money these firms are spending on AI.
All right, and we've seen the S&P 500 hit multiple records recently. We're seeing a rally. You say there are red flags.
Right. It's very interesting because who would have believed us if I told you a month ago that yields are going to be ticking up, oil was going to be trading 103, and the market would be making new highs. There's like a disconnect there, right? That doesn't really make sense. But I think there's a couple of things I think that went on. I think the market had an overreaction in February, so some of that was just taking back that overreaction. And then people were kind of putting the conflict, the Middle East conflict, kind of on the back burner, and they started to focus on, the earnings and the economic data. Because, as you and I both know, politics can create short-term chaos, but they don't price stocks in the long term. What prices stocks in the long term is the economy, is interest rates, is Fed, is the outlook, is what companies are projecting. And so I think we saw this snapback rally. Certainly in tech, it led the way, but tech was oversold. Now it's in the overbought position, right? If you look at its relative strength, it's actually ticking in the overbought zone, which would suggest to you just be cautious, because if we get one miss tonight, that's going to be another reason, just like yesterday's headline article from the Wall Street Journal caused everything in tech to get hit. You get one miss tonight or one cautionary flag or a couple of cautionary flags, then you'll see tech pull back. But I don't think that means the market itself is going to implode. It just means that tech will reprice, temporarily.
And you talked about in your recent newsletter the VIX. You're calling it the fear gauge. Why is it the fear gauge? What does it measure? Can you break it down for us?
So it's known as the fear gauge, right? It's not my name. I mean, when people talk about the VIX, they talk about the fear gauge, which is kind of appropriate, but it's really not. It doesn't speak exactly to what the VIX does. The VIX is a bet on what S&P futures are going to do 30 days out. So it gives you a level of what traders or investors feel, right? When they get nervous or anxious, or they think the market's going to back off, they will buy the options, they'll buy the puts, they'll force the puts to go higher, which forces the VIX to go higher. And that suggests that people are hedging their bets because they're concerned about a market sell-off, quote unquote, a little bit of fear, right? The market trades off, everyone gets fearful. Today, the VIX is still in complacent zone, yet we've got all these things kind of happening. Oil's at 103, tech's coming out tonight. There's a concern yesterday, but yet the VIX is still in complacent zone, which tells you that investors and traders are not yet that concerned anymore that we're going to have a disappointing headline out of the Mag 7, out of the Ford companies reporting today, which I find very interesting, especially after yesterday's article. I would have thought there would have been a little bit more cautiousness going into today. So I think that's what you have to understand. Right now, the VIX is saying that everything is calm. But remember, the VIX doesn't tell you whether or not you should be nervous. The VIX just tells you when suddenly everyone gets nervous, right? That's the difference.
How on point is it?
I think it's very on point. But the problem is, it happens when everyone gets nervous. So again, it's not giving you a signal, okay, get nervous now, buy it now. It's a matter of how everyone reacts. So it's a reactive, for me, it's reactive. But when the market gets nervous, it's very on point.
All right, Kenny Volkari, partner and chief market strategist at Slate Stonewell. Thank you for joining us at the New York Stock Exchange.
Thank you for having me. It's always a pleasure.
Still to come, NYSE-listed DXC Technology unveiled its latest solution earlier this week. An executive from the company will join me here in studio to explain how DXC Oasis is helping companies during the AI era. And elsewhere, financial infrastructure company Zero Hash has applied for a national trust bank charter. Its CEO, Edward Woodford, was among leaders at this month's Semaphore World Economic Summit, where he told Kristen Scholler what opportunities this will offer his firm. And later on, we're going to dive into Oliver Wyman's latest CFO agenda survey, which reveals how leaders are adapting their roles to emerging trends like the popularity of AI. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. NYSE listed DXC Technology says it provides IT infrastructure that keeps planes flying and hospitals running. It just announced DXC Oasis, a new managed services offering model and agentic AI platform that helps companies run and manage their IT systems in one place. Joining me now to share more is Chris Drumgoole. He's DXC's President of Global Infrastructure Services. Chris, welcome to the New York Stock Exchange.
Thank you so much for having me.
All right, so what problem is DXC Oasis solving?
So, in today's world with AI and all the new technology that we love to play with for chat, big companies have more complexity than they've ever had, more people using technology, and they need a way to run that safely and reliably. And Oasis is how we have taken AI and actually solved that problem for customers.
So how does it work? How is it solving the problem?
So essentially, if you think about the way technology's worked for years, you've had a lot of people with hands on keyboard, something breaks, they fix it. Think about your own life. If that laptop breaks, I'm sure you call someone from tech support and they run up here and they fix it as fast as they can. Well, in an AI world, that's dated. It doesn't work anymore. So Oasis takes AI and tools and starts to predict when things like that are going to fail. And that's great for you, but more importantly, for the world's airlines, the world's governments, hospitals, before the operating system, the operating room fails, or before the bank credit card transaction processing fails, it starts to predict that failure and then fixes it before it breaks, before you even knew it happened. So kind of you take the army of people who used to be hands on keyboard responding to incidents, and you let them actually do better work, driving more innovation, moving things forward.
And why was now the time to roll this out?
Well, now is an interesting question because we've been working on it for about 2 years. So if you think about really the dawn of kind of the chat generation of ChatGPT and all those guys, we saw that as a moment to be able to say, there's a different way to run IT, there's a different way to run technology with these new tools. And we started our investment about 24 months ago building this product, and now because it's done. So it's ready to go, and I think the world is really ready for it because, again, that level of complexity that a CIO, she's got to deal with more complexity than ever before in the past, so it's really the right time for Oasis to come to market.
And when you're rolling out something like this, I understand you serve like large multinational organizations. How do people like really understand, or is there an onboarding process? Because this AI language and world is so new. How do you onboard people and get them to buy in?
Yep, well, and that's a great question and difficult for us because we're one of those companies that everybody counts on, but no one's heard of. So almost everybody in the Western world has used a system. If you've taken a flight, swiped your credit card, you've used the system we run, and maybe today's the first time you've even heard we existed. So it's around getting the people who know how to run those complex systems to understand what AI and what Oasis can bring for them. And then typically, the beauty is it doesn't have to change anything. So we can come in over the top, we lay it on top. So if you have existing systems that are working, they keep working. And now we just bring in new tools. And because it is still new, AI is still new, there's still human in the loop. So we still have humans who look at every decision before it gets made. Those humans are just way faster and way more productive.
All right, and what are some of the use cases for your AI?
Yeah, so for us, again, it's really all around those infrastructure and application operations. So again, it's the boring stuff. When you're checking in for a flight and that agent is typing away at that system, it's making sure that that system never fails and delivers what they want. Or one of our customers, United, loves to talk about, rightfully so, their app where it starts to predict for you failure. It tells you where you're going to be. They've built some amazing tools there, and those tools partially use AI and run on systems that we run to help deliver that better customer experience.
Since DXC was launched in 2017, how has your use of AI accelerated or evolved?
Yeah, well, it's frankly unrecognizable from the past. The industry that we're in, the IT services industry, is that AI has driven an amazing inflection point where the business is not going to look the same as it did tomorrow as it did yesterday. So we're frankly all in, and we believe that the fundamental way that we deliver technology will be using AI in the future, or you won't be in business anymore.
All right, and what's next?
Stay tuned. This is the end of the beginning when you launch a new product, so there's going to be a lot more features coming and a lot more use cases coming down the road, even in the next few months.
All right, Chris Drumgoole, President of Global Infrastructure Services at DXC Technology. Thank you for joining us at the New York Stock Exchange.
Thank you so much for having us.
In other news, the Semaphore World Economy Summit held earlier this month in Washington, D.C. brought together CEOs, policymakers, and investors to discuss the future of the global economy. Our very own Kristen Scholler was on the ground and spoke with key decision makers, including Zero Hash CEO Edward Woodford, whose company recently applied for a national trust bank charter. He spoke about it at length and the work Zero Hash is doing. Check it out.
The world is moving on chain. There's been lots of announcements from the DTCC, NYSE, NASDAQ, and others. And obviously, people are thinking a lot about agentic commerce as well. So there's this big momentum about value moving on chain, whether it be a stock or whether it be a dollar or indeed a tokenized deposit. So as you create these tokenized assets and you distribute them, how do they actually move? And so what we've created is an enterprise-grade smart contract to allow for these assets to move seamlessly on chain in a very smooth and easy way.
How does that fit into your business goals?
Yeah, so our goal is to distribute and provide infrastructure. And so as assets become on chain, and we're actually work with a number of players to actually tokenize assets, and we obviously distribute them. So we have 10 million end customers today. How do you connect the issuance and the distribution together? And how do these things actually move? So a real world example of this is, for example, a tokenized stock and a tokenized dollar, such as a stablecoin. How do these things actually move 24/7, 365 in a distributed world? That's one way to do it. If you look at agentic, for example, another example, if you have tokenized data and tokenized dollars in a very fragmented world with billions of agents, how do these things move? So the smart contract is effectively a decentralized mechanism for moving tokenized assets on chain.
Your company, Zero Hash, has an OCC bank charter application. What's the status of that?
Yeah, so it's pending, and we're actually expanding that to also get a Fed master account. What that does is it gives us access to as close to the bare metal of the movement of dollars. And so for us, it's really, really important as you think about tokenized money market funds, tokenized dollars, tokenized deposits. Ultimately, the interoperability, the movement between one asset to another is critical. So being as core to the Fed is actually critical for us. So what that does is it gives us a federal license, which opens up more opportunities, but also having access to the Fed allows for us to move money more quickly between these different sorts of tokenized representations of dollars.
So you're obviously doing business here in America, and it's my understanding expanding into Europe as well. Tell me more.
Yeah, so we've been the dominant player since 2017 in the US, and recently we received approval in Europe, and we've already taken many clients live, including, for example, Interactive Brokers, a 100 billion plus publicly traded brokerage firm that has a large European presence. So Europe has actually undergone a similar transformation as the US, where there's been a lot of regulatory and policy clarity, and that has opened up new opportunities for the largest financial institutions and enterprises to enter the space. And what they're looking for is the same services that we provide globally, which is a one-stop solution, abstracting away complexity. And so what's really exciting is Interactive Brokers can now offer crypto to their clients natively within those applications in the EU.
We've spoken about your business, your goals. Let's talk about the industry and what you see as the defining trends of this year.
Yeah, so I think one is confidentiality, and there's been a big movement with groups like Canton that we support. And how do you move value in a confidential way? One of the critiques about blockchains is that they are public records, and so you don't want information leakage to exist. So adding on the privacy or confidentiality layer is a really big deal for actually true enterprise adoption of blockchains. So confidentiality is a key driver, and we support Canton, we support USDC on Canton, we even support issuance on the Canton blockchain. And so that's a really powerful driver that we're seeing as one of the key themes for this year.
It sounds like collaboration is very important for your industry.
Yeah, absolutely. I mean, look, the way I kind of break down the industry is that there's blockchains, and then there's assets that are built on those blockchains, and then there's infrastructure providers, and then applications on top. We see that as an infrastructure layer, but effectively, you have these two other layers below, Solana, Ethereum as blockchains, then you have assets on top, USDT, USDC, and we provide that distribution gateway to make access to this what is right now a relatively fragmented technology stack and provide a simple one-stop shop.
Thanks, Edward Woodford and Kristen Scholler for that interview. Coming up, the NYSE and the Oliver Wyman Forum held its CFO roundtable this morning. One executive in attendance delivers his biggest takeaways next.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Earlier this morning, the NYSE and the Oliver Wyman Forum held its CFO roundtable event here at the New York Stock Exchange this morning. The event coincided with the release of the CFO Agenda 2026, which surveyed nearly 500 CFOs of companies across all major industries and geographies. Joining me now is Vivek Sen, partner and head of performance transformation at Oliver Wyman. Vivek, welcome to the New York Stock Exchange.
Thank you for having me.
So you co-hosted the CFO roundtable today. What were your takeaways?
We have surveyed over 500 CFOs in this report, north of 12% of the global market capitalization. And the one message in our report is that the role of the CFO is really different today than it was even 5 to 10 years ago. CFOs are no longer just financial stewards. They are shaping strategy. They are in the conversations around company-wide transformation. They're talking AI. They're managing geopolitical uncertainty. That was the center of the conversation today. Each of the CFOs we spoke to was talking about how much their role has changed over the last few years.
And what were the things that they specifically were saying were changing?
So there were a couple of things. The first thing I would say is that the traditional work that their finance functions have done, primarily because of technology, have changed dramatically. So a lot of the repeatable work, a lot of the core analytical work, they are now handing off to folks on their teams. What they are spending much more time on is engaging with boards on topics around how they deploy AI, how they balance funding between growth and productivity, how they think about deploying capital. So their roles are just much more strategic in nature now. They are much more about ensuring that the company's health and safety and soundness is where it needs to be, that the company's growing at the pace that it needs to be, and much less about the day-to-day financial management of the company.
And how are they thinking about growth and capital allocation?
It's very interesting. When we asked the CFOs where their priorities were, there was essentially equal voices for cost and for revenue. And you unpack that a little bit and you realize that in this world we're living in today, things are getting more expensive, labor forces are very challenged, and so cost is really funding all the ambitions around growth. And so CFOs have to really balance both sides. So when they think about capital allocation, they can't really focus on one versus the other. They have to connect the two into the strategies that they're executing.
And one of the defining themes of the survey, of course, was AI. How could it not be?
Yes.
So how are CFOs thinking about AI in the larger scope of the business?
AI was the dominant theme in today's conversation. I think we must have spent 90% of our time on it. You know, the thing we really talked about is that adoption inside companies really lags a lot of what you hear about AI. You know, we all agree on the immense potential of AI, but companies are still experimenting with it. They're still getting used to it, and there is a real tension between letting people learn and understand how to use and embrace this technology and focusing your investments in a few places in the company where you can really drive change at tremendous scale. And the tension between those two is really the center of what we talked about today, because you need to do both.
Do you think C-suite executives have an understanding of how to deploy AI across a large-scale enterprise organization in a responsible way? Do you think they understand the technology? It's so new and it's really just emerging. Did that come up at all?
I will tell you that there were many CFOs today that sounded like technologists. I mean, I was so impressed by how current their perspectives are, how much they are studying this landscape, how much they're trying to make sense between hype versus reality. So what I sensed in that room was a tremendous amount of awareness about the potential of the technology. And we did actually spend a good time talking about the risks as well, about the importance of your cybersecurity efforts, the importance of your AI governance efforts. So I actually felt, you know, just to the point about how much the role has changed, there were times when you felt you were talking to a CFO and times when you felt you were talking to a technologist.
All right, Vivek Sen, partner and head of performance transformation at Oliver Wyman. Thank you for joining us at the New York Stock Exchange, and congratulations on a successful event.
Thank you so much.
Before we go, we're going to take one last look at the markets. Equities are fractionally lower, less than 30 minutes into today's sessions as investors prepare for a very busy afternoon on Wall Street. We talked about it with our experts today in the show. 2 p.m. Eastern, the Federal Reserve is going to announce its latest decision on interest rates before Fed Chair Jerome Powell delivers remarks at 2:30 Eastern. Some saying this is likely his last meeting as Fed Chair. And according to the latest data, about 100% of traders are saying that rates are going to hold steady today. And over 85% of traders don't foresee a rate cut this year. That is going to do it for us on NYSE Live. Kristen Scholler will be back in the anchor chair tomorrow, bringing you the latest on the markets.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?